Goedemiddag aan al onze kijkers. Het is weer tijd voor een interview met de key opinion leaders uit de industrie. En vandaag hebben we een speciale gast, Marcos Viriato, medeoprichter en CEO van Parfin. Nou, Parfin is een modulaire platform voor veilige digitale activabewaring, tokenisatie, handel en beheer, met een veilige, robuuste infrastructuur. Now, hello Marcos, how are you doing? Good morning or good afternoon, not sure where you are right now, but how are you doing today?
Oh, good, Raul. It's a pleasure to be here at the Bitcoin Magazine. It's great to catch up and again express our views on the market, on what we're doing. Great to be here.
Lovely, thank you very much. Well, let's dive straight into it. So my first question is, what inspired you to launch Parfin in 2019? And was there a specific turning point that highlighted the need for blockchain solutions in financial institutions?
Yeah, well, I used to work in finance for all my life, like 25 plus years of TradFi, working in banks and hedge funds. But I got to know Bitcoin in 2014, where I bought my first Bitcoins. It was around $600. And I think more important that when I read the Satoshi white paper, this technology has the potential to transform financial markets as we know. I need to do something in the space, So fast forwarding, and then I bought Bitcoin, Litecoin, XRP, a bunch of, stuff from 14 to 20 to 19. And then when I left the bank I used to work for, I said, I need to do something in the space. So then I jumped, straight into kind of start building Parfin. The view was that there was a lack of technology infrastructure for the mass adoption of blockchain crypto, especially by financial institutions and banks around the world. So that's and knowing what the bank requires to launch, etc. We can say, oh, let's start building with that mindset.
Yeah, no, so that makes sense. I mean, it is true. Institutional adoption of digital assets and blockchain is in its early stages, and so one of the questions I have is, what are the biggest barriers preventing financial institutions from integrating blockchain solutions today?
Yeah, I think there are many, but the key important ones, it's a completely new technology, right? Because banks use .NET, Java, they build code in so blockchain, you need to learn a new set of languages, right? So especially Solidity, and then you have the complexity of dealing with public-private keys, public blockchains, open source, and all those type of technologies that the bank's not used to, and in a centralized way, and especially unregulated way. So that scares when you're a kind of a highly regulated entity. But so far, solutions are coming to help this, to speed up their adoption, like Parfin and what we'll be building. So I think that's changing also because you see, at the end of the day, some of the crypto and especially stablecoins that are out there are in the right. So meaning, providing those services to your clients, you lose business. So a lot of people using stablecoins to pay cross-border payment. If a bank doesn't offer that, they will find a way to do that. So, and then the tokenization of funds, right, starting with the drive adoption out of their hands. So they have to move. So is a shift in Europe, obviously, which established a clear regulation. Therefore, banks will adopt it. So financial institutions in general, and regulation also helps to clarify the path to mass adoption.
Yeah, so I guess one of the main things is, education about blockchain, and the education, and also the regulatory challenges and hurdles, as you say. So if you don't adapt, you get left behind and lose a market share of clients or potential clients. So my next question is, how does Parfin navigate these regulatory challenges across different markets while driving innovation?
we'll, our approach has been, we have three PhDs in the team, doing a lot of research, especially around zero knowledge, privacy preserving, to allow transactions to happen with privacy within blockchains, even public or permission. So that's been our edge, really building, very innovative, technologies and using existing ones to evolve, but in a way that, obviously financial institutions and large players feel comfortable to use. Because again, there's the unknown of those technologies still. There are a lot of research happening, and I think we bring this the work that's been done on the academia, let's call it, to a more pragmatic use of it, applying this into business cases. And I think this is our strength, kind of combining this whole innovation that's happening to the crypto world, the whole thing that comes with DeFi protocols, smart contracts, and the usage of zero knowledge, and bring this to real case and real applications on the perspective of those banks and financial institutions, turning their usage more easy, let's call it. And again, I think this is kind of the path. You see, if you compare back to the internet, for those that are a little bit older, you had to dial in a modem, connect to a hard phone line, and there was a beep, 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 connected, and then you couldn't measure your speed, and you couldn't do anything. Today you get Wi-Fi, done, boom, you don't care. And even email setup back in the day, you need to know, you used to need to know the SMTP address of your email provider, the POP, whatever it is. So now it's transparent. You just log in, create an email account, done. You don't know what's behind. I think we're at the very early stages of blockchain in that sense. And I think in the coming years, the user experience will be much better. The access to protocol, the interoperability, and so on will be much, much easier. And I think that's what we've been building.
Yeah, I think like you said, the key for mass adoption is a lot of times simplifying everything for everyone, because it seems very, very alien to everyone, whether it's DeFi or TradFi. Simplifying products is always the best way for people to use them, and that leads me to my next topic, which is Rails, the institutional blockchain solution that you have. So Rails is a core part of Parfin's strategy, and how does it stand out in the blockchain landscape, especially with so many blockchains being available? What is it that makes Rails stand out?
Yeah, so the first one is Rails is composed by two main components, what we call Rails nodes, which is a single node blockchain, highly scalable. And this Rails node, high scalability, you can connect multiple Rails nodes to each other, forming what we call a subnet. And this gives you a lot of scalability. Let's say you're a bank, you want to tokenize instruments to sell to your own clients. Sometimes you don't need a public chain because that will be costly, it will be expensive. So you then tokenize, but the beauty of this Rails node is seamless connected to our public chain or to any public chain, allowing tokens to be ported over, whereas there will be liquidity. And again, I think the view of this is those institutions to kind of migrate from the existing central database to a tokenized database initially, and then connecting this to the whole world, being able to port tokens that they tokenize internally if they need under their control to an external world. And I think this is going to be the next mass adoption. Let's say you're using your bank, and the bank sells products. You could buy potentially a product of your bank, or you could buy from others and have that, again, in a tokenized format, and have that use this as a collateral for borrowing and lending, use this to finance your home, whatever it is. I think there will be new services and products created on this new ecosystem. And why Rails is different, because we are creating the primitives that allows, this to happen. Which primitives, for instance, the privacy one is very important for some transactions. For others, not. Like on-chain KYC and on-chain suitability. What we say about suitability, under the existing, different regulations, you cannot sell a product to someone that cannot buy it because it's against the law in most of the countries. So qualified investors cannot buy a certain product versus other. So we're building a primitive that ensures, suitability without disclosing your information. Raul is a qualified investor, therefore he could buy potentially this type of token. And few other elements that will allow, this kind of mass adoption. And I think this is the path. The way we see it is there will be, Rails think about it as a kind of a decentralized banking and financial market infrastructure that could be used by banks and by DeFi protocols to offer services to the end clients. And I think this is the kind of in a nutshell, what we.
Yeah, I guess that's also the unique selling point, is that you can, both serve to financial institutions or individuals or whoever it may be. And so I was wondering, why did you develop an EVM-compatible blockchain rather than using an existing network, like, let's say, Ethereum or Solana? What is the main reason behind this decision?
Yeah, actually, Rails, also on the Rails node, this single node, it's a fork of Ethereum client Geth with the highly modified, to be a single node consensus and to be, with an enterprise database, which gives you like a 15 transactions per second. So there's a kind of it's a kind of fork and highly modified. The Rails public chain is, as a matter of fact, we announced a month ago. We're using Arbitrum Orbit, which is kind of this one of the most, in our view, robust rollups of Ethereum. So we end up choosing that. Again, there is a lot of IP on the primitives that we build on top of it. So intellectual property that we're developing, like the Rails node, like the Enigma privacy preserving protocol. So there's a lot of components that will compose this entire ecosystem. And but we are leveraging this because especially EVM kind of became a standard in the market, right? You have hundreds of thousands of developers. All the dApps are ready to compatible. You can port it over to Rails without a problem. So I think this is kind of it's where the future lies. Obviously, there's Solana as well, but I think for different purposes, we see the kind of the Ethereum next ecosystem becoming the standard going forward.
Okay. Well, and so seeing as, Rails is designed for privacy, scalability, interoperability, and decentralization, how do you balance all these components, these aspects, and which do you find the most challenging?
Yeah, well, I think, the most challenging, obviously, is the scalability when we need consensus among on a decentralized world, because again, there's a limitation, right? So that's why we create this concept of Rails node. You can have a high scalability in a kind of centralized way, but you can bulk transfer tokens from one another. That gives you like a much bigger scalability. And I think this kind of will evolve over time. We haven't seen, again, Solana has a high throughput, but when it comes to sometimes to more regulated tokens and tokens that will require more data, then that, not necessarily you need that scalability, because, again, you let's say when you buy a token and you look at the smart contract, sometimes you don't identify what the token is. You just know because you have a front end. Again, in some cases, especially for financial markets, not knowing what product is behind that token, you know, it's kind of scary, right? So I think we're going to be having a balance between having a kind of rich data token where you can have a look and say, oh, this is a corporate bond. Oh, this is a derivative. This is something, you know, like, and with a minimum of set of characteristics that will make sure that you have that asset. It's yours, and you know, you have the rights over it, and it's identifiable. So I think this is kind of, so if you're gonna use a rich data token into a public blockchain the way it is today, probably is going to be too expensive and maybe wouldn't work. I think the balancing between those is that what we're trying to achieve, allowing at the same time like a decentralization, high scalability, and again privacy. In some cases, like banks are transacting, they don't want everyone to see, or clients of, even clients of a bank. You're a client of a bank, you don't want to see people seeing your balances, right? Or for certain instruments that you have, for certain, you know, assets that you have. So I think that's kind of another element which will be important. Again, balance. Sometimes you preserve your privacy to a certain extent, have less scalability, but at the same time, you know, sometimes you get, oh, I want to have a high scalability and losing privacy. So that's the combination that we've been playing in, and there will be different use cases.
I guess just playing around with it and seeing what is the best for what use case. And this leads me actually to privacy versus, you know, like regulatory transparency. How do you ensure that financial institutions remain compliant while benefiting from the blockchain efficiency?
Yeah, so we give some examples. You know, financial institutions in general are highly regulated. Obviously, fraud could happen in a bank or could happen in any company, actually. But then there will be law enforcement over fraud, right, on balance sheets and so on, or high leverage and not respecting the regulation. So that's something blockchain wouldn't solve. You know, we need to make very clear, because sometimes people say, "Oh, blockchain will solve all the problems of the world." No, if there's a fraud, there will be a fraud. You know, and it is what it is. So we expect that financial institutions, in general terms, behave under the various jurisdictions regulation framework, right? Which then probably would require a supervision by the regulator. And the way we've built the privacy protocol, Enigma, is that if there is a requirement for the regulator to see a transaction, we could generate a key viewer, which would be sitting on the hands of the regulator, and the regulator, and again shared by the transacting institutions, and then only the regulator could, with this key viewer, open that transaction and see what's going on. That's an example. We're working on the privacy solution for the Central Bank of Brazil, CBDC, Central Bank Digital Currency, and there's a tool we call Godville, where all the transactions within the network is private. So no one could see transactions on each other. Obviously, the recipient and the sender can see the transactions, and the central bank has a kind of Godville mode where they can click and see. If you open the block explorer of the network, there's only a hash of the transaction. You don't know who received, what's the balance, etc. But the central bank could click and see the details of the transaction. So that's kind of the approach, you know.
So that's what the Godview mode is. That basically that gives them the existing chance or right to see what's actually happening behind the transaction. Okay.
Yes.
So it leads me actually to the CBDC with being tested. Rails is being tested as the privacy solution for the CBDC Drex. How do you see its role in the future of CBDCs? You know, what impact do you think CBDCs will have on the broader financial ecosystem?
I think there, one step back. I think there are countries in which they don't have a sophisticated payment system. So then, in theory, a block problem, right? There are countries that you have a very sophisticated payment system, instantaneous payment, like Brazil has PIX, the instantaneous payment system, very efficient. The way we see it, and then obviously there's the wholesale CBDC that would serve for interbanking payments, more like not a B2B, right? Not individuals. CBDCs that are more designed for retail usage. The way I see it, it's not one fit for all. I think countries will see their usage of the CBDCs, if it's for wholesale, if it's for retail, and what innovation that would bring. But I think the killer cases would be, for instance, cross-border transactions within, between countries, which is still, and if today, if whether or not CBDC would use or a stable coin, again, we'll see. But I think the CBDCs for that purpose could be very, very powerful. We still have a lot of inefficiencies around sending, especially for international commerce. You import something from, Germany, convert BRL to dollars to then convert to euros sometimes to get to pay a German supplier, or vice versa. German is importing something from Brazil and it needs to convert to dollars to get easier to Brazil to be converted to BRL to pay the supplier. So kind of, and again, there's a lot of corresponding bank in the middle. If there's an error, it takes 2-3 days, and so this with blockchain, it's done, right? Obviously, there's a very challenging regulatory requirement, but I think that's the main purpose that could be, highly used, highly scalable, etc. And also in some countries, the case of Brazil. Brazil has a very sophisticated payment system called Pix. You say, I Pix you, seconds is in your account, so you know that. But the central bank had the view that, okay, if you have the money tokenized, settlement layer for a tokenized economy, so it could generate more impact on the society, meaning, companies could tokenize their products and sell it, could collateralize tokenized assets to have a cheaper funding rates. There's a huge, enormous of opportunities that they see, by having the country currency tokenized, and that could be used to tokenize assets in the economy. So I think that's the kind of the link that the central bank has pushed. They say it's not about DREX, the Brazilian CBDC. It's about the opportunity it will create into a tokenized economy. I think that's kind of the link that we're seeing, especially in Brazil.
And that leads me to, do you see Rails being adopted by, whether it's other governments or enterprises outside of banking? Is this something that you foresee in the future?
Yeah, well, we're doing like we have done a POC in insurance, which kind of relates to also a regulated market. But no, I think we see there in the future there will be specific purpose blockchains in our view that will fit for, again, meme coins maybe that will fit for real estate tokenization, that will fit for whatever. We designed Rails to fit for financial markets.
Specifically financial markets, and that's
yeah.
Perfect. Okay, and now my leads me to a couple of my last questions. So bridging traditional finance, and blockchain has been more and more common, and financial institutions have historically been cautious with blockchain. What's the key to convincing them that it's more than just a speculative asset or technology?
Again, we see this in 4 stages, which kind of is where we see when we approach a bank or financial institutions, we try to fit them into one of those 4 stages. First stage is education. They have no clue what is blockchain. They have no internal teams. They are kind of saying, oh my God, I need to learn. So when a financial institution is in that stage, they're not going to use your system. They're not going to understand. So you need to educate, and it's costly. It's a long process. You have to, again, if it's a massive bank, you have to be part of this. Then some banks are on the second stage, which we call, they are doing proof of concepts. So non-productional is just saying, oh, let's tokenize something. Let's create a wallet. Let's transfer a token. Let's represent something into the blockchain. Let's learn about custody. Let's learn about how to do a transaction. So that's the kind of the proof of concept in a non-productive way, let's call it. Then you have a pilot, which is the third phase, and the pilots that the banks say, and from the proof of concept phase to the pilot, banks sometimes they create the digital assets division with someone responsible to run the projects, because on the first two stages it's kind of more innovation lab, experiment, etc. But when it goes to a pilot, they say, "Oh, I'm seeing the potential. I want to effectively do something real." And for that, you need to have a team, right? You need to have generally a head of digital assets. Could be a crypto guy, could be it's like someone more expert there on that. Then when you have a digital assets and you have a pilot, and the bank feels comfortable, proves that the technology work, and we've seen this all the time. They say, "Oh, from the pilot we go to production." So we see now, if you're 2 years ago, most of the banks and clients were in stage 1 and 2. Proof of concept. Now we talk to banks. They said, "We don't want to do pilots, proof of concept. We want to take things to production." So that's the way that the whole thing has been changing over the last 2 years. And again, I think this is the maturity of the market, the regulation, the proven kind of record of real cases being beneficial for the bank's clients, for the society, and so on. So I think we're getting to that stage. But again, when it goes to production, we're still at the very, very early stage, because they say, it's production. Production, yes, I'm tokenizing an asset. I'm selling into a closed loop to my client. I'm taking the benefits of a better fractioning of an instrument, etc. But you're still not using a DeFi lending protocol, a DEX or something. I think the next adoption, and we will see in the next 2 to 3 years, is when a bank will provide liquidity on on-chain FX automated market maker.
Yeah.
It's like and that's where when banks and financial institutions embrace the whole DeFi ecosystem and say, well, now instead of just tokenizing and offering this to my client, I will start providing on-chain services. And that's why we're building Rails. It's like there will be decentralized on-chain services, but there will be on-chain services that are provided by banks. Lending, you say, oh, there's a lending pool for a bank. You have a tokenized asset that is eligible, deposit here, I lend you money against that tokenized deposit in a decentralized way. So kind of this is the bread and butter of a bank, right? Borrow and lending. It takes money from clients and lends it out with a spread to others, right? That could be provided through a smart contract or a lending pool.
That's right.
And I think that's the beauty of what we're building. There will be a transformation in the market.
I look forward to this, and this leads me to my actual last question for looking ahead to 2025 and beyond. What would you see as the biggest milestones for Parfin and Rayls? Are there any upcoming partnerships, product launches, or regulatory developments that could significantly shape the company's direction?
Yeah, I think we're launching the test net of the public chain. We have the 2 of the subnets in production with large financial market infrastructure players being tokenizing commercial receivables and other instruments. So it's kind of growing this. But we're launching the public chain, the test net of the public chain in next month, or end of this month, beginning of next month. Then hopefully between the end of second quarter and mid third quarter, we're going to launch the mainnet with these primitives that are used by banks, and also we're going to do the token launch, the TGE. Rails has a token which is a utility token that serves to settle the transactions. So that's how kind of our roadmap. But we keep focused on bringing real cases, and again, we're very focused on the production. The 4th phase that we talked, the 4th and beyond. bringing real cases on chain and build tools that would allow this on-chain services in the future. So I think that's where we are, and we're super excited because I think we had this view a few years ago, and the market is converging now. Because you could build a nice product, but the market, there's no demand, and then you're dead, right? That we've seen a lot of great startups that had brilliant products, and the market was not ready, and then you die. So I think we're building things that are converging to the market needs, and that excites us a lot.
Thank you very much for this informative, all this information. I'm really sure that our readers and our viewers will definitely appreciate it. Just wanted to say thank you very much for your time and all of it. And that's it. Thank you.